Welcome. Thanks for tuning in. Today is all about mining in 2023. My name is Pielke, and today I'm speaking with Nico Smid for the second time. He's a Bitcoin mining specialist who's recently released his long-form report all about mining in 2023, hash rate developments, difficulty, ASIC profitability, trends, and a lot more. We're giving you a high-level overview. You can download his report for free if you want to follow along. And yeah, without further ado, let's get into it. Hello, everybody. Nice. Welcome back to Hashrate Up. Today, I have the wonderful opportunity to talk to somebody for the second time. Since we've been doing this video thing on here, he has not been on, but he's been previously a guest on the show. Hello, Nico. How are you?
I'm good. I'm very good. Thank you very much. And thank you for having me again.
Yeah, absolutely. No problem. You've got interesting things to talk about, so that's always good for me. Last time we spoke a bunch about South America and how the mining market worked there and what your job really entailed and stuff like that. So anybody that wants to go back and learn about what Nico does for a living is welcome to do so. Today, Nico, we're going to speak about a very interesting report that you released. We're going to talk about the Bitcoin mining boom report, which is basically a year review report on 2023 and everything hash rate and Bitcoin mining. Would you summarize it as that? Is that a correct summary or not?
Yeah, it's an annual review, I would say. And I named it the Bitcoin mining boom because of the explosive growth we saw in hash rate last year.
Nice. Okay, so before we get started, our block time currently is at 826,873. We are at 513 exahashes on the 30-day, and then we have a hash price of 78.48. Came down a bunch, which is surprising, right? Because we've had that huge cold snap in the US. I've seen gnarly pictures of mines being completely frozen over. I'm sure you've seen those as well. But interestingly enough, the hash rate dropped quite significantly, but the hash price didn't really explode to the upside. Only saw a small jump from what I saw. Yeah, interesting. Do you have any thoughts around that? Why was that, do you think?
No, I think sometimes it has to do with timing, right? So the curtailment started right at the end of the epoch, let's say. So hash rate came down a bit, but the average block time not so much. So therefore, the downwards adjustment was there, but not huge.
Okay.
I think what's interesting to see, I think, is that the effect on the network of this cold weather is almost worse than the heat waves in the summer. So that's interesting to see.
In what way? What do you mean?
A bigger retracement in percentage-wise.
Yeah, maybe more sensitivity to the colder temperatures there. Yeah, but most importantly, block times only went to like 10.3 minutes on average. I think I saw on Mempool, which once again proves how great the Bitcoin network works. Right, we get a loss of what was it, 25% of the hash rate or something.
It was quite a dip.
A dip, and you can still perform and use the blockchain as you could before. But enough of that. Nico, you wrote a great report. I will be completely honest, I've not read through it all. But what we will do today is give viewers and listeners an overview. At this point, I should say, if you are listening on audio, this is probably one of those episodes that you need to see on YouTube. So visit the Swan YouTube channel and find us there once this is released, because we're going to be showing a bunch of graphics, and that's going to be the main focus point of this show. So, Nico, why don't you get us started with the first couple slides and talk us through what you worked on?
Yeah, sure. So the report is available for free on my website, but I'll try to describe the charts as best as possible, so that those that only listen to the podcast also understand it. The report I wrote consists of 5 chapters, of which 3 I will go through today, and the first chapter is about the state of the network. Whereby I mostly looked into the network hash rate. And here you see a line chart of the 7-day moving average of network hash rate. And you can see that we started the year 2023 at 265 exahash and finished the year around 515 exahash. So the network almost doubled. It was a 94.3% growth. And 250 exahash was added. So that's an equivalent of 2.5 million S19J Pros 100 terahash, which I think is a good way to look at it and also understand how impressive the growth has been. We saw an all-time high in December of 547 exahash, and it cooled down a bit after that. I also looked into the increase in speed of growth. So last year we broke the 300 exahash level, but also the 400 and 500. And we saw that the amount of days per additional 100 exahash to the network was decreasing quite significantly. So the first 100 exahash that were added to the network took 3,581 days. So it was in early January, I believe, 2020, when the first 100 exahash was achieved. And after that, it took only 840 days to add another 100 exahash and reach that 200 exahash level. To reach the 300 level, so going from 200 to 300 exahash, it took a few more days than a year. And then the last 100 exahashes, so from 3 to 400 and 400 to 500, were added even quicker. So in 146 days and 136 days. So the speed in which the network grew, each 100 exahash increased. But I think looking at the difference between going from 3 to 400 and from 4 to 500, the amount of days are very close. So I think that we are reaching like the max speed of deployment, let's say. If you look at month-over-month growth, it was very interesting to see. Last year we saw a new all-time high in network hash rate each month. And with the exception of June, each month finished higher than it started. So we saw a grow almost each month, with the exception of June. And in June is where the curtailment of the summer curtailment started. So that impacted that number. But a new all-time high each month is historic.
Do you remember, Nico, on this? Maybe, go back to that.
Yeah.
In December, you don't see, or in that winter time, you don't see any of those snaps to the downside, nor in January. Why do you think that is? Why is there no snap to the downside? When
last year there was in December, or in 2022, December 2022, but that's not included in here because I look at 2023.
And we have the
we did
now,
see that.
right?
That's
yeah.
So I think that cold weather in the States came a bit earlier in December 2022. Yeah, so that's the main reason. And then looking at the reasons behind this explosive growth, I think that one of the biggest reasons is that the market sentiment improved last year. I don't know if you recall, but in January last year, so about a year ago, we recovered, or Bitcoin price recovered back above 20K. And there was this first little spark of hope that the bottom was in. And the market sentiment improved throughout the year, actually, because mostly of the ETF
rumors,
speculations, yeah. So the rumors around the ETF boosted really the Bitcoin price. Other reasons behind the growth of the network was that supply chain issues that we saw in 2021, 2022. With regards to electrical infrastructure and semiconductors, those were eased, and a lot of mining equipment, especially the XPs, that were ordered in 2021, 2022. So future orders that were done at the end of the bull market, they came online in the first half of 2023. So future orders were placed. Those took a while to manufacture. They were delivered, and then before they ended up on the rack and were connected and went live, it took quite a while. And those effects we saw in the beginning of 2023. Another reason that we saw such an explosive growth is that ASICs improved in efficiency. So the miners that came online were more efficient than previous miners. And that meant that less electricity was needed and less infrastructure was needed to reach that same hash rate output.
Yeah. Okay. Sorry. Keep going.
Yeah. No. Yeah. If you have a question, just interrupt.
Yeah. No. We're going to cover it now. The deployments internationally. That really interests me. But keep going. Let's go through the list.
So I'll that's further down the list. Also, ASIC prices hit a record low. So it was cheap to purchase mining equipment, and energy prices were less elevated. So especially the gas prices were lower in 2023 than 2022, which made margins higher, and it became more profitable to mine. The upcoming halving that we have this year, end of April, beginning of May, also was a pressure or motivation for miners to deploy as much as they could to benefit from the current block subsidy, which will be sliced in half in a couple of months. And then, the deployments internationally is also something we saw in 2023. So I don't know what your question was with regards to that.
Yeah, my question is why you think that drove growth, because the same hash rate could have been deployed probably. Nationally, if we want to talk about the US as our baseline.
Yeah, so it's not that the US didn't grow. Like there was a lot of growth in the US. The US houses a lot of public miners that have access to a lot of capital and were deploying throughout the year. But in 2023, we did see more news events, let's say, with regards to other countries. The Middle East came in the news quite a bit, with Marathon being active in the UAE, and also Oman announcing that they are trying to get investors to their country to invest in Bitcoin mining. Miners like Bitfarm and also Marathon announced that they were mining, or they're going to start mining in Paraguay, and Bitfarm also increased their capacity in Argentina. So you saw quite some announcements worldwide, and even though there was this China ban in 2021, there's rumors and suspicion that there's quite some hash rate coming from China still. The data is less accessible, let's say. It's being pushed underground, but suspicions is there that there's quite some mining going on in China still.
I mean, all three manufacturers, right? Avalon, MicroBT, Bitmain, they all have, all these major ones, they all have still their productions in China, and so I'm not quite sure how thorough that ban is. And as you say, I mean, I've seen numbers up to like 20% of the hash rate still being there or something like that. They're true, which is huge, right? But it can't all be guerrilla miners. But yeah, you listed.
And also some mining pools are China based, right?
Exactly.
Like Antpool, for example.
Right.
So China still has a big influence on the.
I think
on the
banned industry is a big word in this context.
Yeah.
So the manufacturers increasing the self-mining fleet, do you know more about that? Is that public information or is that pretty private?
Yeah, so Canaan, they deployed machines that were hosted with Stronghold. Also Antpool, which is linked or related to Bitmain, they started a big cloud mining service and now also you saw a release about BitFuFu, which is also related to Bitmain. They're also increasing their self-mining activities. And I know from colleagues, let's say, in the industry that Bitmain and Canaan and WatchMiner, in a lesser extent, we're looking for space to deploy the machines.
Yeah. So I know we're going to probably talk about 2024 or this year a bit more later, but if you look at the list, right, market sentiment improved. I think that is something we can check off next year when we do this. Supply chain issues, yeah, let's see what's still to come, right? I know on the Horn of Africa we now have issues with the supply chain again, which is a super important logistics route. So as a result, now all these ships are coming past my house here in Cape Town. Going around the bottom, right? Improved efficiency of ASICs that will come online, M60s, S21s, T21s, that's going to happen this year. ASIC prices are still pretty low. Energy prices are structurally higher, I feel like, right? If you look around hosting, not just in the US, but in South America and the Nordics as well, like power is more expensive. The upcoming halving obviously will not be a factor. But then, deployments internationally, I think that's going to be a continuous this year's story that we will talk about next year again. And then, manufacturers, who knows, maybe they will keep increasing. Okay, but those are the main reasons that you've identified. And I can't think of any other big ones right now that you missed. So good job on that. Shall we continue?
Yeah, sure. So in 2024, we can expect more hash rate to come online, and this is based on the orders that were made by public miners. So they have to announce when they do big purchases of mining equipment. And last year, 1.4 billion in purchase commitments were published. And more than half, 760 million, was ordered in Q4 of 2024.
Wow.
So we saw a total of almost 80 exahash that was ordered, of which 45 exahash was ordered in Q4. And most of these companies, they aim to get this online in the first part of 2023.
Yeah.
So
who are the biggest ones for Q4 2023? I can see Phoenix.
Yeah. Riot had like an 18 exahash purchase.
Insane.
So
Rockdale.
252 million order. So that's quite significant.
Crazy. Yeah. It sets the baseline.
And also, I found it.
Yeah, we're going to talk about that later. Again,
yeah.
Like where that 50% hurdle is that you have to be on to stay profitable after the halving. It sets the baseline for that. I feel like quite strongly all these purchases.
Yeah.
Now what cost per hash Phoenix Group and players like Riot will have. But sorry, go on.
Yeah, those numbers, they also publish what they pay, the amount of dollars they pay per terahash, which if you look at this list, it was lowered. Like in the beginning of the year, it was a bit higher, and then later on the year, it was a bit lower. And many of these orders later in the year were also the newest machines, right? The sub 20 joule per terahash machines, like the S21. And if you look at Bitfarms, for example, they went from S19s, S19J Pros to S21s directly. They never hopped on the bandwagon of the XPs, so they skip a generation, let's say. But there's quite some exahash coming up in 2023. 2024, I meant to say. In 2024 we have this the halving coming up, and if you look at previous halvings, you see quite a drop in hash rate. Last halving in 2020, it was a 25% decrease in hash rate. But if you look at the days that that it took to recover back to the amount of exahash it was before the halving. Those periods are not too long. Last time it took 39 days, so that's a bit over a month, and the dip is recovered. Let's say so. Yeah, there will probably be exahash or hash rate coming offline, but the days to recover, I wouldn't expect it to be a long
So what
time.
does that tell us about
Um,
the hash price curve, right? It'll get halved, then it'll jump up. So if the halving was tomorrow, we're at 78, be like 39, probably jump up to, well, let's call it 15%. I don't know, give me a round number, like 40, maybe, you know.
Yeah, I don't think like it's not like machines go offline from one day to the other. So it will be, I think, it will take a couple of days before
All right.
machines turn off. But it's also, I wonder if this drop will be similar like previous drops, because in 2022 we saw quite a severe bear market, but not a lot of hash rate came online. Like many companies went bankrupt uh, or started refinancing their business, but the miners they kept on hashing. Let's say so the rigs stayed online while they changed hands or were refinanced.
Yeah.
So I'm curious to see what's happening now. Also, um, shutting off is a big step. So I suspect that maybe companies go bankrupt, but then they merge or get acquired by others while they keep on hashing. And also, yeah, not everybody can just shut off for a while because you have a contract with your energy provider, and you might lose that contract. So there might be miners that just continue to mine at a loss, hoping for that the bump in price, and that they will survive that period
Yeah, or they will
of
just
negative
replace the
returns.
machines, right?
They can replace machines and mining. In comparison to 2020, it became more sophisticated, right? Like now, there's a lot of firmware available. Machines are able to power down and become more efficient. So I expect that miners uh, yeah, will play more with that, like powering down instead of shutting off completely, and by powering down, increasing their efficiency, reducing their power usage.
So
So
what do you guess here, Nico? Do you have a guess that you want to make on how low it'll drop or how much it'll drop by?
yeah, later on, we can have a look at where the majority of the network is. So I do expect a drop, but I expect it to be like I think a lot of people expect a 25 to 30% drop, but that doesn't come. That's my suspicion that we all hope for it, but it will disappoint those that stay online. That it's not such a deep pullback because miners just keep on mining.
Mhm.
So the next slide, you can see a chart of Coin Matrix. They analyzed the network efficiency. So in January of 2023, the average efficiency was 36.6 joules per terahash, and at the end of the year, there was 32.2 joules per terahash. So if you want to know where you're standing, this is a like if you're below that average, then I would say that's a positive thing. So in a year, the energy usage per terahash decreased 12%. And you see that this line has been going down for quite some years, but it's flattening out a bit.
That is, do you know the energy price of this of the year
What do you
end?
mean the energy price?
Yeah, by you know that slider that that Cambridge has on their website, like it shows the average efficiency
Yeah.
and profitability at different levels. I think they use like 5 cents as the baseline or something. But it'd be interesting. I mean,
Okay. No. Yeah, that I did include in the
okay,
report.
gotcha.
I did use their site to check the overall energy usage, which was around 18 gigawatts at the end of 2023.
Yeah.
But I didn't look at
Alrighty.
that data. All right, then going to part 2, which is mining economics. And in mining economics, Bitcoin price is a very important indicator. I know there's a lot of analysts out there, so I'll keep this one short. We saw price going from 16,500 to around 44,800, so 171.5% increase year over year, which is fantastic for all the Bitcoin bulls. And here I show a chart with yearly candles, so annual price action of Bitcoin. And you can see the cyclicality that Bitcoin has of one red candle followed by 3 green ones. And what we can see is that we had the strongest recovery candle after such a red bearish candle in Bitcoin's history. So last year was really an amazing year from a price standpoint.
Interesting.
Yeah. Difficulty adjustments. Last year there were 27 adjustments in total, of which 7 were downwards and 20 were upwards. It shouldn't be a surprise that the majority was upwards because of the increase in hash rate. The highest upward adjustment was an increase of 10.26%, and the biggest decrease was 3.59%. And these both happened in January, so the volatility difficulty-wise was a bit higher at the beginning of the year in comparison to the rest of the year. The year started with a difficulty of 35.36 trillion, and we went all the way up to 72.01 trillion, which is over 100% increase or doubling.
So on,
and it's been
yeah. Sorry, Nico, I didn't mean to interrupt you. There's always a bit of a lag when we do this online, right? I will always wonder with hash price, the Bitcoin price matters for maybe like 2 weeks, right? Because at most, because then we have the difficulty adjustment. Do you see the difficulty adjustment catch the hash price down when it got elevated because of Bitcoin's price, or how do you see those two factors play together over the last year?
Yeah, then I'll jump to the next slide, which is hash value. There you can see the impact of the difficulty adjustments. So hash value is the amount of Bitcoin a miner can earn per petahash per day, and a petahash is 1,000 terahash. Here in this chart, you can see that for the bigger part of the year, hash value has been stair-stepping down. And hash value is influenced by the block subsidy, the transaction fees, and then the difficulty adjustment. So here you see like the impact of the difficulty adjustments quite good.
So what is that huge spike? What is that huge spike?
Yeah, so that huge spike is the transaction fees due to the ordinal inscriptions. So we saw one spike in March, which was short-lived. It was 1 week. Within 1 week, it went up and down again. And towards the end of the year, the spikes were less high, but the elevated transaction fees were sustained for a longer period.
If you average that out, right? If you take the spike out there and you see that sort of stepping function down, if from what I said before, if difficulty adjustment catches Bitcoin price, then it would be somewhat of a flat line, right? But here we see a steady move downwards. That is because of the steady growth in hash rate, I assume.
Yeah, so this is hash value. It's expressed in Bitcoin and not in dollars. So the next slide will be about hash price. There you see a different effect because of because hash price is influenced by Bitcoin price as well.
Right, of course, yeah.
But maybe to to close this slide, let's say we started the year at 0.00359 Bitcoin per petahash per day and ended at 0.00242. So that's a 32.4% decrease. And we saw a spike, like the highest level we saw in May when the first time when those that ordinal craze happened for the first time. So looking at hash price, where the Bitcoin price does play a role, you see a bit of a different picture. Most of the year we were ranging between the $80 per petahash per day and on the top end, and then $60 per petahash per day on the lower end. So we were ranging, going up and down in that range, let's say. And then towards the end of the year, Bitcoin price breached the 35,000 level, and there was these increased transaction fees, and that pushed hash price all the way up to $128 per petahash per day. So at a certain point, price will outpace a network hash rate. At least in the bull market, let's say, and then hash price will increase.
Yeah.
For your reference, the previous peak of the bull market was around $400 per petahash per day, so significantly higher. Question is whether we can reach those levels again. I think if we don't have any crazy activity with regards to transactions and transaction fees, it's far-fetched, but at a certain point, if Bitcoin follows its cyclicality that it has shown in the past, then Bitcoin price will outpace network hash rate, and hash price will jump
significantly. Yeah, I mean, look, there's always different approaches to this, and I mean, we're seeing this, and everybody sort of has their theory, and I guess this is where also miners, have to analyze this data and see what they do and where they're competitive and where they're not, according to the halving and what fleets they operate. But now, if you just look at it from a very basic standpoint, saying, hey, if we want to add another 500 exahash to the network, it'll be very, very difficult. Like the first 500 were a lot easier than the next, right? But now, if there's no upside, there's no limit to the upside when it comes to Bitcoin, right? If these ETFs keep doing what they're doing, and supply keeps getting scarcer and scarcer, but there is a limit on how fast and how much infrastructure you can add in the same time, especially, right? So over time, it'll catch up, but I think there's a big chance that with a big jumps in price, the hash price will actually stay elevated for quite a lot of time, because there's simply not, enough room and capacity to grow the hash rate as quickly as the Bitcoin price goes up.
Yeah, a build out can easily take between a year and a year and a half, right?
Yeah.
Like signing power purchasing contracts, acquiring land, and then getting all the inputs to or infrastructure to build a mine. It takes time. It's very a slow process.
Yeah.
At a certain point it will catch up, and the same goes for ASIC prices, which I will discuss a bit later. But right now there's a lot of ASICs available. There will be a point in time probably when demand outpaces supply, and then the prices of ASICs will increase again. So jumping to the next slide, which is about transactions per block. Last year we saw an average transaction per block hitting new all-time highs. So there were around 4,500 transactions per block. And the previous high was recorded in April of 2019, around 2,500 transactions per block. So that's
that's a yearly average, right?
No, it's a daily average,
or
it's an average per block.
Yeah.
Sorry, an average transaction per block.
Okay. Yeah, interesting.
I think this is very interesting because we're not in a full bull market yet, and you see this amount of transactions going on. So the transaction fees in US dollars, we saw a spike in May and the last 2 months of 2023, which had to do with these ordinal inscriptions. And it was also interesting to see that the transaction fees as percentage of the total block reward reached levels that are similar to the top of the bull market in 2017. So transaction fees as a percentage of total block reward were very high. And so high that if you look at transaction fees in Bitcoin, in May and December, transaction fees were even higher than the block subsidy. So it surpassed that 6.25 Bitcoin per block, which is quite exceptional. But with the halving coming up, it's probably going to be happening more in the future. And the reason being, obviously, that the block subsidy will be cut in half. So you need less transaction fees to surpass the block subsidy. I already mentioned shortly the ordinal inscriptions, the reasons behind the high fees. Last year, the highest daily spending on ordinal inscriptions was almost 10 million, which was recorded on December 12th. We saw over 52 million inscriptions and around $180 million spent on inscriptions.
What do you mean by spent? What was it on transaction fees?
So fees, yeah, transaction fees spent on inscriptions alone. Yeah.
Wow.
And this data I got from a website called June. So if you're interested in ordinals and everything around it, all the data they compile there.
All the miners are very happy about ordinals. What is your take? Do you think not an ordinals person or not person? I'm just saying, is this going to stick around? You think for 2024 and afterwards, or do you think because now we've already come down, right? Right now we're talking about 32 sats per VByte.
Yeah. So I think we might see more spikes if new developments happen in that area. I don't know if it will be sustained. Like it's sustained quite a bit in November and December, so that was good to see. Mm-hmm. But we probably see something similar. That there's times that a certain application becomes or inscription becomes popular, and then many jump on it and compete for block space and are willing to pay higher fees.
Millions, man.
Yeah, millions. Yeah. All right, and lastly, on this part, I look at the daily miner revenue. So that's the block subsidy and the transaction fees taken together, and then you get an amount in US dollars. So a big part of 2023, the daily miner revenue did not break 40 million. But towards the end of the year, it rose as high as 64 million. And for comparison, the top of the 21 bull market, we saw 75 million in daily miner revenue. So getting close to that bull market top, while we're not in the bull market yet, or in a full-on bull market, not parabolic phase at least. So next part is on ASIC markets. I don't know if you had any questions about the previous section.
No, I think you covered it all. It's just, what are the biggest adjustments really? Talking about difficulty, why did those happen? Once the ordinals, I think, made miners come online because they could earn so much more money. So the difficulty had to keep everybody in check. Can you go back to the biggest difficulty adjustments for me quickly? Were there any other big spikes to the downside? Look at those downward spikes. What are those? Is that just in summer coming offline?
Yeah, so that's June. That's June, July. That's curtailment time.
Yeah. September.
Those were the deepest. September, I don't recall why. it retraced.
And then, you see in January what I talked about earlier, that cold snap, right? That must also been curtailment.
Yeah, so there was curtailment in December, and then like that impacted the amount of hash rate online, and then this was the 3rd of January, so right after you saw the difficulty adjustment going down, because it's every 2 weeks that you see a difficulty adjustment.
I think really it's only, what other reasons are there for a lot of hash rate coming offline other than power prices being elevated on the spot market and miners making more money selling it back to the grid?
Yeah, I
really
think
think of
black
much.
swan events, like the China mining ban,
Yeah,
stuff like that. Like
yeah,
if all of a sudden
of course, yeah.
the new president of the United States decides to ban mining, then yeah, we'll see a big
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 shift.
decrease. And yeah, if the halving impacts the amount of hash rate online, then it will also have this adjustment to the downside.
Fair enough. All right,
Yeah.
let's jump to ASIC prices.
Yeah, so going into the ASIC market, last year we saw historic low ASIC prices. In 2022, prices came down very hard. In 2023, it was slowing down a bit, but we kept on sliding to record lows. So we saw prices we haven't seen ever before. From the all-time high, you see that the next generation, so the most efficient machines under 25 joules per terahash, they dropped 80%. So that's your XP dropped 80% from the day it was launched. And then the rest of the models, looking at their all-time high and then the current price, they all dropped 90% or more. So yeah, ASICs are very cheap. So I think it's a good time to buy ASICs.
Yeah, absolutely. Buy ASICs, man. Now, I mean,
No financial advice, of course.
never financial advice. But it's interesting. All these prices are denominated in dollars per terahash, and you can go see them on Lux's hash rate index if you want to follow this up afterwards. This is a very,
Yeah.
very, very important graph. I think one of the most important ones out there for anybody that wants to get started mining. And what's so interesting is what you're showing here, right? That green box where the price differences are not actually that great between the different generations.
Yeah, I'll show that in a bit. Here, the green box also indicated that it seems like towards the end of the year we were trying, or the ASIC prices were trying to set a floor. So we saw a slight increase. My expectations for 2024, or at least the first few months, is that we'll stay at these lower prices. We won't see a sharp decrease nor a sharp increase in the coming months. Around the halving, obviously, there might be more availability on the market, which might impact ASIC prices. But yeah, we're so at such low prices that there's not a lot of room to go down anymore. Let's say. So I think the biggest decline is behind us. Yeah, interesting to see in 2023 there was a decoupling between Bitcoin price and ASIC prices. So this chart shows the ASIC prices and the Bitcoin price as of 2020, and the ASIC prices really followed the Bitcoin price. So you see the highest levels being reached around the market highs of or the Bitcoin all-time high. It dropped, ASIC prices dropped together with Bitcoin price in 2020. But in 2023, Bitcoin price started to recover, but the ASIC prices continued to slide. And the reason for that is that there was a big influx of machines on the secondary market due to defaults on equipment loans and ASIC sales or asset sales and corporate bankruptcy. So yeah, there's more supply on the spot market, than there is demand, and therefore prices are still sliding despite the increase in Bitcoin
Do
price.
you think this will be a decoupling with all the efficiency prices or just for some? Because I know, I think it's public that Bitfarms has like 200,000 M30 miners warehoused or whatever that they don't have space for. So what I'm thinking might happen, Nico, is that you will see more efficient miners follow Bitcoin price more closely,
Yeah,
whereas
that might
if
be.
the older machines will stay behind. Like you can always see a little lag, right? So Bitcoin price will go up, then ASIC prices will go up. Bitcoin price goes down,
Yeah,
ASIC prices go down, and so on and so forth. And now you see that decoupling then the last bit of the graph that you're showing. But yeah, I think there's an absolute
yeah.
oversupply
I
of old gen machines.
Yeah, I do think like at a certain point, like if that hash price does explode to the upside because deployments, infrastructure cannot keep up with hash or with the Bitcoin price, it becomes more profitable again, and you might see prices of these S19s and M30s go up again,
Yeah.
just like the S9 did in the previous bull market. So I think if Bitfarms indeed is sitting on this batch of M30s or whatever model you mentioned just now, like it might be a good time to just keep on sitting on those machines and wait for the later stages of the bull market before selling those machines, because at a certain point, yeah, these less efficient machines will become profitable again.
Mm-hmm.
Yeah, so we already touched briefly on the premium on the next gen machine. So next generation is that under 25 joules per terahash, which is mostly the Nminer S19 XP. In 2022, when they were launched, they were going for a high premium, and even at the beginning of 2023, they had a premium of almost $21 per terahash if you compare it to the S19J Pro. That premium diminished throughout the year, and there's various reasons for that. Um, at first, miners were paying a premium for those most efficient machines because they were protecting themselves from further downsides. Like that was in 2022. The bottom was not in yet, and we didn't know where the bottom would be. So miners wanted to protect themselves from further downsides, and were willing to pay a higher price for that. And because of the shift in market sentiment and the shift in price action, yeah, that protection is no longer needed, let's say. Next to that, there is also now more supply of those machines. So in 2022, those machines just came to market, and there was not a lot of supply, and now there's a lot of supply of these machines. And finally, later last year, so as of September, I believe, there were these announcements by all the big manufacturers that they were launching sub 20 joules per terahash machines. So even more efficient machines are coming to market or are in the market right now, which impacts that premium as well. So the next slide is about the estimated dominance per ASIC miner. Again, this is from Coinmetrics. Recommend to visit their website and check out their data. Here you can see all the percentage per model of miner. And if you add up all the Bitmain models, so that's the S9, S17, S19, S19J Pro, and those XPs, you can see that almost 75% of the network are Bitmain machines. So Bitmain is really, really dominant in the market. MicroBT, the Watts miners, they are second on the list with almost 18%, but it's a big gap, let's say. So Bitmain is very dominant. You can also see here that almost 70, so 96.15% are ASICs that fall in that category of 25 to 38 joules per terahash. So a big part of the network, almost 70%, are those S19s, S19J Pros, and the M50s, for example. If you look at the top, you see in green, you see that the S19 XPs they started increasing their contribution to the network throughout 2023. So that's that deployment that I referred to earlier. And also interesting to see is that S9 is still not dead.
No, man.
There's still S9s running.
Still kicking.
Yeah.
Still heating homes.
Yeah, they're very popular amongst home miners. Yeah,
and I think they're running in like Venezuela and stuff. Yeah.
Yeah, and also popular to play with because it's a low cost to learn how to work with miners.
Yeah, absolutely. Where does this data come from, Nico?
Yeah, so I would recommend to check their website. They study, I think it's believed the nonce.
Yeah.
Like I'm not very technical, but it's like I think it's a frequency or the voltage. No,
there's
I
like
think
a
it's
certain
frequency that they
signature.
measure.
There's a certain signature to the nonce, and from that you can derive what machine produced it. I need to have that guy.
Yeah, so that's how
he did that. I know he was on a mining pod as well.
Yeah, I'm not a technical, so I'm not the best person to explain it. But I love the results of that analysis and the data that you can derive from it.
Yeah.
It's also interesting to see, like in those analysis, that machines come online before they're available on the market, right? So that means that manufacturers are testing or self-mining before these. So the S21s are probably on the network already before they hit the market.
Yeah.
All right, so next slide shows a table with different columns. The first column shows electricity rates going from 1 cent per kilowatt hour to 9 cents. And then the columns next to that show different generations of ASICs, right? So you have one column under 25 joules per terahash, 25 to 38 joules per terahash, 38 to 36, and above 68, and then above 68 joules per terahash, which is your S9. Looking at this is a table that was published by Blockware based on Coinmetrics data and public filings. I updated it towards the end of the year. They published it in April, and I updated it in the end of December. You can see that 15%, so 15% of the network consists of the most efficient machines. Also interesting, if you go to the last column where you see the total percentages, there you can see that almost 70% of the network are these new generation models, so 25 to 38 joules per terahash. So that's your S19 and your M50. And then 43.4% of the network is mining at 7 cents or higher.
I was just going to ask you, sorry, before you go on, Nico. Basically, what this table shows is how much of the network with what type mines at what electricity rate, right?
Yeah.
Do you know where they take the data for the electricity rate from?
Yeah, so it's public filings and hosting companies publishing their fees.
All right.
It has to say, I have to say it's estimation. I also
of course.
Posted it in the Telegram group. I got a remark about it. It's an estimation and nothing more than that. But so
there is no central arbiter of truth, right, in the Bitcoin network. So all of this is really guesswork.
Yeah, it's compiled of other data that's publicly available.
Yeah.
But I think this estimation does help you in benchmarking. Where are you? Should you be worried going to the halving?
Yeah.
Should you upgrade your fleet or not?
I mean, as you said, 22 plus 20% operating at 7 cents or 8 cents.
So
that's
43% is mining at 7 cents or higher. So that's quite a bit.
Yeah. Wow.
Yeah.
Right. So if you're below 7 cents, does that mean you're safe, Nico, in April?
Yeah, I would say if you have a machine like S19 or XP even, or like an efficiency below 38 joules per terahash, and you're below 7 cents, there will be many before you that will be mining at a loss. Let's put it like that.
Fair enough.
Yeah. All right, so go to the next slide, and this is, I think, really one you should see on YouTube, and because it's difficult to explain. But it's a table that shows on the y-axis the kilowatt hour price, and then on the x-axis the hash price, so the amount of dollars per petahash per day. Taking that into consideration that 34.8% of the network are machines of 25 to 38 joules per terahash mining at 7 or 8 cents. If you then look at this range of 7-8 cents for this type of miner, here I took a miner with efficiency of 30.5 joules per terahash, so a bit in the middle. You can see that with the 30.5 joules per terahash machine, which is a S19, you break even around the $55 per petahash per day if you mine at 7 or 8 cents. And you said earlier that hash price now is $78 per petahash per day. So if the halving would happen tomorrow, your S19 will be on the water.
Yeah, I mean, where do you see hash price going after the halving? What do you think?
I think well, if it will depend on the transaction fees, obviously. Like I think it's interesting to see how many people will compete for that inscription right after the halving, which is a unique moment to inscribe your ordinal, let's say, or whatever. But I think if you look at last year, the higher end was $80 per petahash per day. So I personally would consider 40, like slicing that in two, that you have $40 per petahash per day, and prepare for that. Whether you need to upgrade your fleet or prepare financially to mine at a loss to survive that difficult period. That's up to each miner, of course. You can also increase the efficiency of a part of your fleet or add new miners to your fleet, so you increase the average efficiency.
Yeah.
But I think it's key to survive those difficult months after the halving, because most of the money is made when Bitcoin goes parabolic, which is usually the end of the bull market. The later stage of the bull market usually start like 6 to 8 months after the halving. So surviving that difficult period in order to benefit from the later stages of the bull market is key, because in a couple of months you will make high returns on your mining endeavor. So
unless you use
but
hash value as your baseline, then the bull market doesn't really matter.
There's miners that mine for the assets that don't look at dollar pricing. There's even miners that prefer mining at a loss just to get the assets in, using their fiat for electricity. But I think it's up to each miner to determine what they can handle, how risk averse they are, what their budget is to increase. But I would say like that 7-8 cent is really like also a hosting fee. You see a lot of retail miners hosting it around that fee. If I was a retail miner, I would contact my host and ask if it would be possible to go into low power mode, for example, for those months
Yeah, or
after the
send a new
halving.
machine and upgrade it.
Yeah, if they have the budget for that, then yeah.
Yeah, I like this slide a lot. But do we have?
Yeah, there's a lot of information out in there. So
Yeah.
yeah.
Yeah, anybody should have a look at this, and maybe if you're mining already, analyze your own situation, see where you are on the chart. But I understand you have more, Nico, don't you?
Yeah, well, a couple of slides more. So, looking at the trends in the ASIC markets of last year, you could see that there was an increase in hash rate output and power density. So in 2022, only 2 ASICs were launched, which had more than 200 terahash per second. In 2023, there were 10 new models that were launched with over 200 terahash per second. The Watts Miner M63S Hydro had the highest hash rate output of 390 terahash. Yeah, it's also interesting to see that the power density increases. So there's hydro-cooled units that go as high as 7200 watts, while a standard S19 goes at 3200 watts. So it's more than double. I think for operators, it's really important to consider these trends, like prepare your infrastructure in such a way so you can host either hydro-cooled or immersion-cooled, or that you can at least withstand a grow in power density, right? Like if you have your rack space and you have all the models on there and newer models come in, that your infrastructure is already as prepared as you can, so you can absorb that increased power density. Other trends we saw, well, I mentioned it before, that the top 3 manufacturers announced sub 20 joules per terahash models. We also saw many hydro machines launched, and also immersion ready ASICs. So ASICs that have like a handle so you can pull it out of the oil easily, or that have the fans removed already, or no stickers, so you don't need to remove the stickers before you dunk them into the oil. Yeah, so that's interesting. I think you see a couple of form factors that are interesting and more tailored towards the infrastructure, let's say.
Yeah, we also have more competition, which is great. Epic Blockchain, DZ Miner, Oradine coming. I'm excited for those.
Yeah, so last year we saw Epic and DZ Miner, and also Oradine, or however you pronounce it, coming into the news that they launched ASICs. It is a very competitive space, and as you saw, like Bitmain really dominates the space. So it's going to be tough for those companies. But what I do like is that they are very innovative. You see DZ Miner, for example, with miners that can go in high and lower power modes, already providing a hash rate range, let's say. And also having a display with information like power usage, hash rate, stuff like that. And Epic and Oradine are located in North America, so that's also interesting to see that ASIC miners are being designed and assembled in Northern America.
Much needed,
So that, that's I think a positive development. And that's it. I lifted up my table.
Yeah, I think we've given a very thorough overview.
Yeah, there's more insights in the report. So I compare return of investment between machines, I give an overview of the new ASICs that were released. Also look into hash rate distribution and mining pools. and energy usage, and I have some 2024 outlooks.
Yeah.
So
Yeah, as you
feel
said,
free
it's
to
available for download. We'll definitely put the link in the show notes and make sure that it's very accessible for everybody. There's a huge amount of knowledge in there. We've only scratched the surface. I feel like, having skimmed through it, and I know how much work this is. So I appreciate the thorough review of 2023, Nico. Is there anything that I have not asked you that you wish I had?
Yeah, I think for today we covered it all.
Yeah.
We'd love to come back maybe after the halving in half a year, see what happens then,
Maybe we do
whether
a
our
quarterly
thoughts
review.
are.
Yeah.
Yeah, I think the halving is the end of April, but no, a quarterly review will be great.
Yeah. Before I let you go, Nico, very briefly, does Bitcoin consume enough energy or not?
Yeah, you asked me this question last time. I don't recall very well what I answered, but I think it consumes sufficient energy at the moment to secure the network.
All right.
But there's a lot of stranded and wasted energy out there that can be monetized. So yeah, we'd love to see that more and more that miners go there where others can't, where there's supply but no demand. So that's what I hope to see.
Where can people follow you, Nico? Where do they find you?
Yeah, so I'm on Twitter, Smid Nico, @SmidNico, so that's SMIDNICO, or on LinkedIn. I became more active since the algorithm on Twitter doesn't like me that much. I switched a bit to LinkedIn, Nico Smid, and if anything, just go to my website, digitalminingsolutions.tech.
Lovely. Guys, if you learned something new, if you took something away from this, you know what to do. Follow the show, ask us all the questions. That's what we're here. That is what we're here for, right? So any feedback is appreciated. Give me constructive feedback as well on the show, where we can still improve. I think this will be the 5th episode released. And yeah, let me know what you think, guys. If you again learn something new, you know what to do, and I'll see you next time. Thank you. Bye-bye.